Welcome to Invest Well, Be Well, a podcast for wiser investing and stronger living. I'm Rusty Vanneman, longtime investment professional, and I'm joined each week by my co-host, Robin Murray.
Thanks, Rusty. I'm a storyteller and journalist, and I am so excited to explore the ideas, insights, and people shaping the intersection of performance and purpose.
This podcast is for thoughtful investors and driven professionals who want to grow in their portfolios and in their personal lives.
We'll talk long-term investing, behavioral finance, personal development, and what it takes to live and work with intention.
So let's get started. Let's invest well and be well together.
This podcast is brought to you by Main Management, LLC. Since 2002, Main has been recognized as an ETF strategist that combines an institutional process with the personalized service of a boutique firm.
Our guest today is Allison Mazza. She's the head of U.S. Wealth at State Street Investment Management and president of State Street Global Advisors Funds Distributors. That's a mouthful, but great interview.
Yeah. Allison is really one of the true leaders in the ETF world. She's at the forefront of helping advisors and investors think about what it really means to invest wisely and how innovative tools such as the SPDR ETFs can support long-term success. But as we hear shortly, Allison's story goes way beyond the market. She's also an incredible example of resilience, balancing a high-powered career with her personal life. And as we go into detail, she even navigated the tragic challenge of losing her home in the LA fires. And along with her husband, who was another stalwart of the ETF ecosystem, she's become part of what many call the industry's ETF power couple. What were some of your takeaways, Robin?
Yeah, she had a really great personal story that was just inspiring, and she had so many insights that she pulled from that I think will be helpful for anybody listening. Just talking about how many people came to help, strangers, friends that she hadn't talked to in such a long time, how she realized how strong they are, how resilient they are as a family, and really how she took all of those lessons into her work and, is using that today. Don't take things for granted, even when it comes to the markets. It might not be what it is today. It might not be what it is tomorrow, and just building portfolios with that in mind. So I think a lot of great takeaways for our audience.
Yeah, well, first of all, you can tell why she's a star in the industry. And as you also mentioned, the theme of resilience comes up, both in terms of investing and also just stronger living. And I also liked how she quoted Nick Saban.
Well, always good to quote Nick Saban in a podcast.
Well, let's get to it.
Allison, welcome to the show. Welcome to Invest Well, Be Well.
Allison, thank you again for being on the show. I know your schedule is really busy, and we finally got you on the podcast. And as you probably know, we do have an initiation right for our podcast guests on the show, and that is we need a walk-up song to set the tone. What is your walk-up song?
I have a lot of walk-up songs. I am a big fan of 90s hip-hop. So I'm not sure that those are appropriate for this audience. So I'm going to pivot a little. Lately, my walk-up song has been Survivor by Destiny's Child. And I'm sure we'll get into that more in this podcast. But the lyrics, I'm a survivor. I'm not going to give up. I'm going to make it. I'll survive. Those are really resonating with me in this chapter of my life.
Yep.
Okay, well, Allison, we want to talk about you and your career. And you've had such a great career in the ETF and investment space. Before we dig in, can you share just a little bit about your journey and what led you to your current role at State Street Investment Management?
Well, like a lot of people, it's a little bit of a winding road. I grew up in Waco, Texas, home of Dr. Pepper and the Baylor Bears. And, a fun fact, I was a cheerleader in high school with Joanna Gaines from HGTV fame. And I left Waco and went to college in Ithaca at Cornell University. Got to say, go Big Red. And then after college, I moved to New York City, and I joined Prudential in their leadership development program. And that's one of those classic programs where you rotate through different assignments to get different exposure, to different businesses. And my first assignment was in Prudential's retirement marketing department, focusing on 401k rollovers. And I didn't know it at the time, but looking back, that was a really important first role for someone right out of college, because it immediately got me contributing to my 401k at the age of 22. So, my second assignment was, again, looking back, very pivotal. And that was at Prudential Securities on Wall Street. It was this classic Wall Street firm. I remember there was a sign on the wall that we saw every day, and it said, "The brokers pay the bills." And, brokers is an old school term for financial advisors. We don't use that term much anymore. But that sign, "The brokers pay the bills," was a constant reminder that the financial advisors were our clients and that we were there to support them. And that sign has always stayed with me, that the clients pay the bills. And if you can keep the client front and center and do right by them, you'll eventually find success. So in that role at Prudential Securities, I was in my early 20s. I was working, on some of the first fee-based programs in the industry. This was in the early 2000s. Remember, post-dot-com bubble, there was this big shift in wirehouses, moving from, stock pickers to financial advisors, moving from clients paying commissions for each trade to paying a fee for advice. And in that role, I was traveling around the country. I was partnering with branch managers and their divisional leaders to educate their financial advisors on how to position this new structure to clients, really helping financial advisors reframe the conversation from getting compensated for transactions to being valued for advice. And that role early on really taught me how valuable financial advisors can be to clients and really the power of advice. So I had built a number of relationships with field leadership in that role, and there happened to be an opening in Texas on the asset management side of Prudential. Today it's the firm that we know as PGIM. Back then it was called Jennison Dryden. And the divisional manager of Pru Securities in Texas recommended me for that job based on our positive experience working together. And that lesson sort of really reinforced to me the power of first impressions and how you show up professionally. I didn't realize it at the time, but the work that I was doing with him, I was really interviewing for the next role. And I've always carried that with me. When I'm hiring today, I place much more value on my lived experience of working with someone more than, what might happen in an hour-long interview. And so I, got that role. I moved to Dallas from New York. I became a wholesaler for PGIM, and I had early success. And within a couple of years, I was promoted to be a divisional manager with PGIM, and I moved to Los Angeles. I was in my mid to late 20s, managing people now twice my age. And, leading isn't necessarily about how many years you have under your belt. It's more about how can you try to bring out the best in people. And in that experience, I learned a lot about the importance of building trust, of listening to different perspectives, of communicating effectively. And, I'm sure I made a lot of mistakes along the way, but ultimately saw success in that role. And then in around 2007, 2008, I started hearing a lot more about these things called ETFs from the financial advisors that my team was calling on. And this was back in the day when things were very driven by Morningstar style boxes. And as a wholesaler, the holy grail was when you could build a relationship with a financial advisor and get them to give you their list of mutual funds that they used in each style box. And then you'd take that back, you'd run some analysis, and you try to show that your particular mutual fund manager outperformed the one that they were using over the last 3 or 5 years. And it was all very backward looking, and advisors were spending a lot of time, burning a lot of calories, if you will, hiring and firing managers rather than spending time with their clients or growing their business. And, we were hearing more and more financial advisors saying that they were converting their business to these things called ETFs. And in the summer of 2008, I got a call from State Street. And State Street is the OG of ETFs, we pioneered ETFs in the United States. And so when an opportunity to join their distribution team covering SPDR ETFs came up, I jumped at that opportunity. And really at the time, I thought I was just moving to a firm that had a better investment vehicle. I really had no idea that it would turn into this career that I have now. And I just celebrated a couple of weeks ago my 17th anniversary at State Street. And over the years, I've had the opportunity to cover many different client types, be in various leadership roles. I've led sales teams focused on different channels, different client types, home offices, national accounts. Today, I'm the head of U.S. Wealth for State Street Investment Management. I lead all of our client-facing teams across all intermediary and direct retail channels in the United States. We have an unbelievable team. We're responsible for about 1.3 trillion in assets under management. So we represent about a quarter, a little over a quarter, of State Street Investment Management's 5 trillion in assets under management. And it's been a wild and amazing ride.
So part of the show, we focus on investing wisely, right? The wise investor. From your perspective, what does that really mean?
A couple of things that stand out to me when I think about wiser investing. I mentioned that my first job out of Cornell was in retirement marketing and how that taught me early on about the power of saving and investing in a 401k early. Again, I look back and feel fortunate that I learned that principle then, because I didn't grow up in a family that talked a lot about investments. And so, that's a bit full circle for me now, because at State Street, retirement is such a key focus for us. And, I think it's great to be at a firm that emphasizes the importance of saving for retirement and starting early. So to me, that's, the first really important principle of wiser investing. There's that old adage of time in the market, not timing the market, and starting to save for retirement early. I know that that's a basic term, but as complicated as the world is today, sometimes it's the simplest solutions that actually make the most sense. And then, the second thing that to me stands out around wiser investing is really around building resiliency into portfolios. And this was also reinforced with my own lived experience. When I joined State Street in September of 2008, that was right in the early stages of the global financial crisis. I look back, the week after I started, Lehman filed for bankruptcy. And so it was a very uncertain and volatile time in the markets. But looking back, it actually couldn't have been a better time to join State Street and the ETF industry in general, because the global financial crisis turned out to be a really significant accelerator for the ETF industry. And the reason why that happened was because it underscored the value of liquidity, the value of transparency, the value of diversification. And so, the GFM was this big accelerator for the industry as it shifted from mutual funds to ETFs. But what really stuck out to me about that time, September of 2008, the global financial crisis, was the value of our gold ETF. Investors were looking for portfolio diversifiers. They were looking for ways to build more resilient portfolios. And I felt so fortunate at the time that we had that gold ETF and that we could help them build more resilient portfolios. And that to me is another one of the hallmarks of wise investing, building in resiliency for the unknown.
I like it. All right, so you mentioned ETFs, and of course, State Street Investment Management is a pioneer of ETFs. This includes the SPDR ETFs, including the industry's oldest ETF, SPY, which of course tracks the S&P 500. So ETFs, as you mentioned, have really transformed how investors build portfolios over the last several decades. So 2 questions. First, from your vantage point, why are ETFs such a powerful tool for wiser investing? And second, how do you see the role evolving in the years ahead?
Now, Rusty, we talked about how, the first ETF was created in the U.S. by State Street 32 years ago. We have this track record of offering ETF products that have led investors to better outcomes. I think some of the benefits are the transparency, the liquidity. They tend to be more cost effective. They tend to be more tax efficient. Today, we're seeing ETFs used in ways that I don't think were contemplated in 1993 when SPY was created. They really democratized investing and expanded exposure to different parts of the market. We talked about gold, but we see that today with crypto. We're now seeing ETFs combining public and private assets. And so I think we'll continue to see the industry evolve and continue to democratize investing. My bet is this continued democratization of investing in the alternative space. And then, the other area that I think we'll continue to see ETFs expand is into untapped areas, potentially 401k plans. And if this happened, that would be particularly meaningful for State Street. We're a leader in ETFs. We're also a leader in defined contribution. And so that, again, would be this kind of full circle moment for me, because the industry where I began my career, in retirement, and where I, now am, ETFs, would finally intersect. And, I just think it would be really exciting if the 33 million defined contribution participants that State Street serves today would be able to use ETFs to help them meet their retirement goals.
All right, so besides manufacturing dependable investment strategies and solutions, how does State Street Investment Management help advisors and investors put wiser investing into practice, whether it's through education, tools, product innovation?
Yeah, all of the above. So we are fortunate as the fourth largest asset manager in the world. We have this global footprint. When we look at our clients, they're really this diverse mix of investors, ranging from financial advisors to sovereign wealth funds, to pension plans, to recent college graduates, and really everything in between. And because of our size and global scale, we have the ability to offer deep expertise really on virtually any topic. So not only do we have, a subject matter expert when a client needs guidance, but we're often at the forefront of that conversation, at the forefront of innovation and pioneering those solutions. So depending on what a client is looking to be educated on, we likely have a subject matter expert on it. We've been a pioneer, particularly in ETF education. We offer a plethora of content around not just understanding ETFs, but research around portfolio construction, how to build models, economic research, market outlooks, analytics, flow reports, really all sorts of tools to help investors build better portfolios.
This episode of Invest Well, Be Well is brought to you by Main Management LLC, a pioneer in actively managed ETFs since 2002. Main Management starts with a clear fiduciary focus, delivering the transparency and personal attention you'd expect from a boutique firm. They provide financial advisors with solutions, not products. Main also believes investors should keep more of what they earn, emphasizing net of fee after-tax performance to help clients retain more of their returns. I've known Main Management for years. I've met thousands of managers over the course of my career, and one quality I really value: they invest alongside their clients. They eat their own cooking. Over 10% of the assets they manage are their own partner assets, and more than half of the firm are partners themselves. That says a lot. To learn more about Main strategies, including buy right hedged equity, U.S. sector rotation, thematic innovation, and all asset models, please visit their website at mainmgt.com.
So switching gears a little bit, the other theme of our show is stronger living. You are in a high-powered, very high-energy role. Tell us what you do to keep your own energy, your focus, and your decision-making really sharp.
To be honest, it's not always easy, but I try to focus on the basics. I try to eat healthy. I try to get movement in. I try to get enough sleep. I sort of laugh. There's that expression, America runs on Dunkin', Allison runs on sleep. I travel quite a bit, and I've learned over time that it is helpful for me personally to do the same movement or exercise routine on the road as I do at home. I've got 3 kids and 2 dogs, and so it's not as easy to make it to the gym or to a class as it used to be. So believe it or not, my husband and I are still Peloton users, particularly those strength training programs. And I found that having that consistent program, both at home and on the road, makes it easier for me to follow through and be consistent no matter where my feet are. And then, I also just try to stay grounded. I spend as much time with my family as I can. We have a tradition where we do a family walk as often as possible. We have 2 dogs, and we try to do walks with those dogs as often as possible. I've heard that people who have dogs tend to live longer than those who don't. And I think a big part of that is because you're getting more movement just from walking your dogs.
So I got 2 quick questions following up on that. First of all, what kind of dogs?
We have 2 dachshunds, and I've had dachshunds since I was 8 years old. So I'm a huge dachshund lover.
Awesome. All right. And so you mentioned your husband. So I have to ask, you and your husband are both big names in the ETF ecosystem. So what's it like being part of this ETF power couple, and how do you support each other through the demands of the industry?
Yep, Rusty, my husband has also been in and around ETFs for as long as I have, maybe a little longer. Today, he's the CEO of Round Hill Investments, and having the 2 of us working in the ETF industry certainly makes the dinner table conversation interesting.
Yeah.
There's a lot of conversation about the industry, or did you see this firm did that, or did you see this fund launch? And we sort of laugh that it's a good thing we have 3 kids and 2 dogs so that there's something else to talk about at the dinner table besides ETFs. But I do feel really fortunate to have him as a spouse because he can relate, not just to work in general, but he knows the industry really well too. And I think it's interesting because we're at different ends of the spectrum. I came up through the distribution side, and the majority of my career has been spent covering clients. Dave came up through research and product and strategy. And so we have really complementary perspectives. And I think that makes us really good teammates. We tend to celebrate each other's wins, big or small. I think that's really important. And then, of course, we get the added bonus of getting to travel together when there's, a conference or an industry event that we're both going to, and that makes it fun.
Yeah, that's great. All right, another question going back to an earlier topic as well. So you've been managing and leading teams for some time now. What practices have you found that help build resilience and sustain performance, especially when markets get tough?
I mentioned that I grew up in Texas and I was a cheerleader in high school. So maybe football is a little bit in my blood. Yeah. My husband is obsessed with football. But I think what we're both really obsessed with is the personalities and the coaches. And we both love Nick Saban. And I can really relate to and embrace Saban's coaching philosophies around teams, particularly around having a disciplined process and creating accountability, creating repeatability, controlling what you can control. And I think that approach is applicable in any industry, but I think it's particularly applicable in financial services because of the ups and downs of the market, like you mentioned. And I think in challenging times, relying on your process, relying on your discipline become all the more important. It's funny, last year we celebrated our gold ETF's 20th anniversary. And I had the honor of interviewing Nick Saban at a client event. And that was a bucket list item for me. But in that interview, he, again, really underscored that concept of on a team, not focusing on the scoreboard, but rather focusing on the next play and then the next play after that and sticking to your process. And that philosophy of controlling the controllables is something that I try to adhere to when leading teams. And, there's one other thing, like the other component is around building teams. And, we had Magic Johnson at a client event a few years ago. I'm telling you this, and I'm realizing maybe I like sports more than I realize. But Magic Johnson at this client event said something that really resonated with me and it has stuck with me as I've built teams. And that was that, on a basketball team, you have 5 different positions. And when you're looking to build out a basketball team, you're not looking for the 5 best forwards. You have a small forward, you have a power forward, you have a point guard, you have a shooting guard, you have a center. And that same approach to building teams works in my world. We're not just assembling talent. We're not just looking for the 5 best forwards. We're looking for different skill sets. How do they blend together? What are the different viewpoints? What perspective will this person bring to the table and to the team? Will we be able to help them play to their strengths? And what role will they play in order to make the team, as good as it can be?
I like it.
Yeah, good stuff. Well, I do want to ask you, Allison, about an experience that you went through. We know that it was an incredibly difficult experience that you had with the LA fires, that you lost your home. So first, we're so sorry to hear that. This is such a traumatic experience. Would you be willing to share a little bit about how you got through that?
Well, thank you. I appreciate that. We're a little over 9 months since the Palisades fire and the Eaton fire, which actually happened at the same time here in Los Angeles. It was an incredibly challenging time. It was an insane situation. If you could just imagine having to flee your home with your 3 daughters and your 2 dogs and whatever you could fit into your 2 cars. And to not only lose your home, but to lose your entire neighborhood, your community, your schools, your churches, your dance studios, your soccer fields, all the local businesses. And, we were homeless at first, and then we became nomads. And for about 5 weeks, we moved from hotel to hotel to Airbnb to Airbnb. And it was really an unimaginable, insane situation. What we tried to do was really focus on what we did have. We didn't have any of the material things, but we did have ourselves. We had our family. And that really put things into perspective. We lost a lot of things, but those were just things. Stuff is just stuff. I miss some of that stuff, but in the end of the day, it's just stuff. And so while it was an incredibly traumatic time, and we're still sorting through it, at the same time, it showed us how strong we are and really how wonderful our community is. And we had people reach out in ways that I could not have imagined. We had friends from 40 plus years of life, all different parts of our life, reach out to help. Friends of friends, parents and relatives of friends, people we hadn't spoken to in decades, some people we had never met before. Samaritan's Purse sent a team of complete strangers from across the country to help us sift through the ashes of our home to see if anything survived. So at a time of such immense loss, it was also very humbling because so many people did reach out to help. And my husband and I are not the kind of people who like to accept help. We like to be the givers of help. But in this situation, we really needed the help, and we had to acknowledge that. And we were so touched by so many people who did show up for that.
So in a moment of crisis like that, what helps you make decisions and move forward from it?
What really helped me make decisions at that time was my 3 girls and just keeping them in mind. They were my North Star. Everything that I thought about was, how will they remember this? How can I make this okay for them? I knew that they were watching. I knew that they were seeing how we would respond. And I also knew that if we were okay, they would be okay. And so a little thing that we started a tradition with another family that are dear friends of ours that also lost their home, where we met up at the beach almost every Sunday, and we called it Survivors Club. And we would commiserate, we would laugh, we would cry, and we would just share this experience that both families were going through. And that Survivors Club, that weekly meeting, with this other family, really provided a little bit of normalcy and some fun for us during that time. And we just tried to make the best possible decision each day with the information that we had in that moment. And we didn't have all the information. So we just sort of took it day by day and decision by decision. And we're still doing that to this day, to be honest.
Well, bringing this back to investing, if it's even possible, but what lessons from that experience carry over into how you think about building resilient portfolios for investors?
Rusty, there's that old expression, buy the insurance before the house is on fire. And I don't want to make light of this because unfortunately there were many people who did not have insurance for various reasons. And this is not the right podcast to get into that. But that old adage is true. So one of the lessons that I think about is to not take things for granted. Don't assume that the way things are today is the way that things will be forever. And think about what can you do to build in some resiliency. And I think that carries over to investing. What are we taking for granted now? We've got the stock market at all-time highs. Are we taking for granted that we haven't had a true bear market or a crisis in a while? What are the additional ways that you could build in some resiliency into your portfolios? Do you have the right portfolio insurance? Are you making sure that your portfolio has assets that might make it more resilient? And then the other thing is the lesson is, you can start over and you can begin again. And I think that holds true for investing as well. You could have a bad year and you can bounce back from it. And that's not the end. Focus on what you can control, make the best decisions with the information that you have, and you can begin again if you need to.
Well, I can't even imagine or truly appreciate that whole experience. But looking back, what habits or mindset shifts have been most important for you as you've rebuilt? And we're talking not just your home, but your sense of stability and energy.
Rusty, an experience like this definitely gives you perspective. You can lose all of your stuff and you're still here. And it just reminds you that that stuff is really just stuff. And we are currently living in a friend's house. We're fortunate. It's literally the next town over from the Palisades, where we lived before. And from this house that we're in today, literally from my office window right now, I can see the mountain that separates this neighborhood from the Palisades. And when we first moved here on that mountain, I could still see the burn scar. So this is literally where the fire stopped. And at first, when I saw that burn scar every day, it was unsettling. It was intense. And then I decided to use it as fuel and as inspiration that, the fire stopped right here, but we are still here. And that we're right on the edge of where it ended, but we're not going anywhere. And so today, when I see that mountain every day, I'm reminded of resilience and endurance, and that we have the ability to move forward.
That's great stuff. And such an interesting and fascinating takeaways from that experience, which is it's just really insightful and useful, I think, for all our listeners. So if our listeners want to walk away with just one idea for today about investing more wisely, living with greater resilience, what would you want that to be?
Robin, I think I would want it to be that life is not defined by what happens to you. It's defined by how you respond to it. And that you can start over. You can begin again. You can turn what maybe at the time feels like an ending into a new beginning. And just that notion of you can always start over and you have the choice to begin again.
Well, Allison, thank you so much for coming on the show today. This has been such a great conversation. We so appreciate you coming on. Before we let you go, where can advisors follow your work and continue learning from you?
You can follow me on LinkedIn, Allison Bonds Mazza. I'm always looking to expand my network, and so please feel free to reach out.
Allison, thank you so much for your words of wisdom and also for sharing your personal story. But I have one more question, though. And can I take a guess at your two dog names? This is my guess. I'm going to guess one of them is named SPY and the other is GLB. Am I close?
I wish we had been that clever. Our dogs are Chloe and Duke.
Oh, I was so close.
Yes, you were really close. Next time, the next dogs. And talk about a dichotomy. Chloe is 16 years old. I carried her around with me as we were moving from house to house and hotel to hotel. And Duke is a new joiner to our family. He's a year old, and we rescued him just a couple of months ago.
Nice. Well, thanks again for your time today. We really appreciate it.
Thank you, Rusty. Thank you, Robin. Great to chat with you.
Thank you. Well, we will be back next week. Thanks for listening to Invest Well, Be Well. Let us know what you think. And if you like what you hear, don't forget to subscribe.
Important risk information. Investing involves risk, including the risk of loss of principal. State Street Global Advisors, Funds Distributors, LLC, member, FINRA, SIPC, an indirect wholly owned subsidiary of State Street Corporation. Before investing, consider the fund's investment objectives, risk, charges, and expenses. To obtain a prospectus or summary prospectus, which contains this and other information, call 866-787-2257 or ssga.com. Read it carefully. Not FDIC insured. No bank guarantee. May lose value. Ad tracks 850-9207.1.1.am.rtl. Expiration 10/31/26.
This podcast is hosted by Rusty Vanneman and Robin Murray and produced by Garrett Crosby.
If you have feedback, guest suggestions, or just want to connect, please visit my website, rustysbridge.com, or email me directly at rusty@rustysbridge.com. Until next time, invest well and be well. This episode of Invest Well, Be Well is brought to you by Bonrian Capital, led by my friend and colleague of nearly 10 years, Shana Sissel. Shana was named a Top 20 Wealth Tech CEO in 2025, and it's no surprise. She's passionate, does the work, and knows asset managers, portfolio allocations, and alternatives like few others in the business. She's authentic, tough, and deeply cares about all her stakeholders, the kind of character you'd expect from the daughter of a police officer. If you want an investment manager who combines deep due diligence with innovative solutions and alternative investments, please check out Bonrion Capital at bonrioncapital.com. This episode of Invest Well Be Well is brought to you by Bonrion Capital, led by my friend and colleague of nearly 10 years, Shana Sissel. Shana was named a top 20 wealth tech CEO in 2025, and it's no surprise. She's passionate, does the work, and knows asset managers, portfolio allocations, and alternatives like few others in the business. She's authentic, tough, and deeply cares about all her stakeholders, the kind of character you'd expect from the daughter of a police officer. If you want an investment manager who combines deep due diligence with innovative solutions and alternative investments, please check out Bonrion Capital at bonrioncapital.com.